We're going to talk about some committee stocks today that are falling and falling pretty sharply. I've got a number in front of me. We're going to start with UnitedHealth. They missed. They say their earnings are going to be worse than expected. Stephanie Link owns the stock. What do you think?
It wasn't about the quarter. It was about the guidance. 2025 at $16 was lower than kind of worst case scenario. I thought it was going to be something like $18. So that's obviously disappointing. But you have a new CEO, and I think he's kitchen sinking the numbers for this year and then the recovery into next year. But I think the realization that this is a 2026 turnaround story is the reality at this point. I have always expected 2026 to be the turn, not 2025. We already knew all this bad news. That's the reason the stock down 40%.
They've been kitchen sinking, garbage disposaling, dishwasher.
Well, it's not been pretty, for sure. It's not been good. This is not one of the reports where I say it's a buying opportunity right today. I do think for the long term, but you have to have a 2-year time horizon at this point.
Wait.
But you have a CEO who is a new CEO who's proven, who was behind Optum and the success of Optum for 10 years as this company. Mm-hmm. He left. So he's the executive chairman. New guy comes in, was a disaster. Now he's back, and it's just going to take time. They got to reprice Medicare Advantage. That's the whole key, and that happens next year.
You say it's not a buying opportunity today, but you had been buying when the stock had pulled back on other news. So what's the difference between then and now?
Well, I just think that it's going to take a little more time, and I'll look for better opportunities, or maybe this is the opportunity, Scott. I don't know, but there's no rush is my point, because you have a CEO who is being extremely conservative, rightfully so, but it's going to at least take another quarter or two for that to prove itself out.
Okay, show me Merck, please, because they missed. They planned $3 billion in cost cuts by the end of 27. They narrowed their full-year outlook. The stock is down 3 1/3%. Kevin Simpson owns the name. Do talk to me.
Also not as bad as feared. I mean, this could have been far worse. We rotated out of UnitedHealthcare into Merck. So this is our name along with Amgen in the healthcare space. I love the proactivity of the $3 billion in price cuts or savings or whatever you want to call it, because we know what's going to happen with Keytruda and the patent cliff in 2028. They were up 9% still on Keytruda this quarter, but they're not relying on it. They've made acquisitions. They're doing cost cutting. There's other sectors that I think make this a long-term buy for us. But again, I would not be running into this name just on this earnings report today by any means.
Show me Royal Caribbean, please, because that stock was lower as well. Joe, they beat, their revs miss. You own the name, which is down about 5%. What's going on?
Wasn't perfect, and it needed to be perfect. Just to kind of highlight how much this has appreciated. The stock right now is 11% above its 50-day moving average. That is a lot of room for it to fall. It's had a dramatic recovery in terms of its balance sheet. It's improved remarkably. But when you guide lower, that is not perfection. And what is required right now for some of these stocks that are momentum-oriented is perfection.
What about Spotify? They forecast their profit below estimates.
All right, so first I'll begin my remarks by saying the stock probably will fall further. The reason that it will probably fall further is because it is owned. It is overweight in terms of positioning. The bullish sentiment is there. However, when you look at the fundamentals of what this quarter was, this was actually a good quarter. The challenge was they had higher expenses related to employee compensation. That's short-term oriented. You want to look at premium subscribers and monthly active users. In each one of those instances, there was growth. The guide for each one of those suggests that there will be further growth in the future. There's also now the suggestion that they are going to try and somewhat compete with YouTube. They're going to deliver more videos. So this is a company that fundamentally, I think, has multiple tailwinds. That doesn't mean the stock can't fall further because of how aggressively it's owned right now. But I think the long-term vision is what's required here on this stock, because at some point, 12 months from now, you'll certainly be rewarded.